Good afternoon, everyone. Welcome back to the discount. Today is Monday. Happy Monday, March 20th, 2023. And as always, let's start out with the spiders, the S&P 500, the SPY. And instead of going to the daily chart, I want to jump right into the 10-minute and show to you the importance of what this line is. And although it was invalidated, we actually are still finding importance at this line. And where does this line come from? Well, let's go back to the daily chart here. And as always, what we've been saying, right? Bearish below, bullish above. And we had this invalidated head and shoulders neckline. And why was it invalidated? Well, let's zoom in a little bit here. So when this daily candle closed above this head and shoulders neckline, that invalidates it. And when we go back to this chart, this is what you're seeing in this area right here, is when we closed above it, and that pretty much invalidated the head and shoulders neckline. However, it's important to note, look at how many times it broke down, back tested it here. It came up, found resistance here. 1, 2, it came up again, that's 3. Came up 8 times off the clock to break above it and close above it to invalidate it. It broke down and could not stay above. What happened today? Well, this was our short area that we had on the chart, and I just did not want to take it because the manner in which it was getting into the level is important, at least to me. I just did not want this trade given the light volume that we were seeing in the morning for the SPY, as well as it was going into lunchtime, and it didn't feel like sitting in a short trade over lunchtime. So let's get into what this looked like from a day trading perspective. So to the right of the vertical is the start of the day's action, okay? Now, very important because look what happened today. I said 391.50 was the pivot in the early going. If we can't stay above, we're likely to see some lower stuff. And that lower stuff, believe it or not, was much further lower, all the way down at around 385, obviously with pit stops along the way. However, what happened today, it broke out above 391.50. As you could see, it was important. It broke out above, it closed the candle below. Ultimately, it went up and ran a test again of this black line here, which was, again, zooming in and zooming out, the invalidated head and shoulders neckline. Now, looking at the action, I said in the Lazy Day Trader channel, if we go to the Lazy Day Trader channel, 393.25 to 394 is the short zone now. Be aware, it is light volume and into midday. Shorts aren't easy at this time. It has to happen soon. It's, a snooze fest. We were waiting on the Fed. And by that time, I just was not interested in the short. But look, that just because I am not interested in the short doesn't mean that you can make a decision for yourself, as I'm guiding you guys in this market and not necessarily have to take everything that I do 100% of the time. For example, so let me draw this 394. That actually ended up being the dead short. So it coincided with the head and shoulders neckline and the 394 that I had called out. 393, let's pull this up here. This was the short zone, 393.25, all the way up to 394. Ultimately, it ran up and then it gave you an amazing day trade. I think this is about $2.50 or $2, which is also 20 to 25 handles on the ES futures for any futures traders out there. These numbers are very important for a reason and why I'm calling them out. Another reason why I called it out was this was a huge breakdown area. The stop was a clear stop of candle closes above 394.40. So typically on the first run of something like this, when you get a run up in this direction, when you get a run up on the first run right into this zone and right into this, you're not going to typically blow right through. Okay, that's not typically what's likely going to happen. What's going to happen when you get into in a zone like this is you should pull back. Now, it just didn't get there in the manner in which that I liked it. That doesn't mean that you guys could not have made the decision for yourselves. The numbers that I call out are important in the room. Now, if we would have ran up like that right into that thing, well, that would have been an amazing short opportunity. Or even if the volume for the day was a lot heavier. So let's zoom out a little bit again, guys. Let's go into the NASDAQ, the QQQ. So just down, 0.2% on the day, or no, I'm sorry, up to 0.2% on the day. Nothing to make a federal case out of. This is a bullish breakup candle. The first sign or signal of trouble is going to be obviously getting below this breakdown or this breakup candle, and then again going to test some of that lower stuff down there and that trend line, right? So that's going to be trouble for the bulls. I had made a video though, however, on Sunday that we could very just, be waiting on Jerome Powell on Wednesday and break out here, right? And resume uptrend. So that's certainly possible. We just have to wait and see what we get. For the IWM, the same thing, right? We have an ugly pattern, the Russell 2000, ugly pattern here, and if it continues to chop around, we just don't know which way it's going to go right now. But for right now, this is just not a good looking chart. So we'll have to take it at face value. It was up 1.3% on the day. Nothing to make a federal case out of, being that it's been down and oversold for quite a bit. But I would not be surprised to see some more weakness in the Russell and some strength in other areas. And going into the all-important Bitcoin, so cleaning up the drawings for a second, this is turning out to be what looks to be a doji candle on the daily chart. Now that is typically a sign or signal of a trend change, and you just almost filled this gap. Is Bitcoin just going to run up here and not fill this gap at all? I'm not sure. It's very unlikely it did all this work to do that. So, I would not expect it not to fill this gap. However, if it closes this daily on a doji, it's not necessarily to anything to make a federal case out of, but it is something that you want to pay attention to, because that could be signaling that we're going to get some downside. Now, what's that downside look like? I had tweeted out that, look, if we stay above, it's a big breakup candle right here. It coincides with this kind of upsloping trend line channel that we've created. We stay above 25K. There's really nothing to make a federal case out of. I understand that's a lot of points for leveraged traders. However, it's really still bullish. So I said that if we were getting up into that gap and above, that I'd be adding some shorts. It just never got there. So now I'm just going to have to wait and see what we get. And also, everyone is really waiting on the Fed on Wednesday and what kind of tone we're going to get. It's going to be a pretty important meeting, right? Are we going to continue business as usual, or is Jerome Powell going to have to do some more to save these markets? So anyway, guys, Bitcoin looking good still, just a small pullback, bullish uptrend. Everything is pretty overextended. That doesn't mean that things can't stay overextended for a long period of time. Same thing with gold, right? Flight to safety. This is the original flight to safety, looking great, just small pullback. I still think we have some downside for gold. And then as well, that would coincide with some downside with Bitcoin. It looks like it's kind of moving together, at least at this stage of the game. So again, guys, great stuff today. Let me know if you have any questions. Hoping that this stuff is starting to make sense for the newer folks in the room. And any seasoned traders, please let me know if you have any questions. These numbers are pretty straightforward and they work out pretty well. So looking forward to continuing the Lazy Day Trader channel. As you can see, going back into it, We have a 90% win rate to date. Looking to keep that up, looking to keep the fun going, and looking forward to profiting together. See you on the charts and see you tomorrow. Take care.